Top gold price drivers. There's a myriad of reasons to invest in this 5,000-year-old safe haven asset. Ask any wealthy investor and they will tell you. With prices still elevated, high interest rates, and the mounting national debt, the present and future purchasing power and cost of living of everyday Americans is more and more uncertain. If you think that you may be falling short of your retirement goals, see the link in the video description to the free inflation and retirement calculator. Quantitative easing: how gold prices are affected by interest rate cuts. As stated in the previous video, the servicing costs of the U.S. national debt will be in the range of $1 trillion this year at the present Fed interest rate. Unfortunately, quantitative easing by central banks, or money printing, stated loosely, is the standard remedy to a highly indebted system. Simply put, interest rate cuts usually weaken the strength of the dollar and send the price of monetary metals like gold and silver up. Simply stated, the value and price of gold is inversely correlated with the strength of the dollar. It is worth noting, if the Federal Reserve pivots their monetary policy too early, this could lead to a resurgence of inflation. If this renewed inflation cross-current meets a recessionary front, this could lead to stagflation, which pushes gold prices even higher, as seen in the turbulent stagflation period of the 1970s. The Federal Reserve can push down the demand side of inflation, but they have very little influence over the supply side, driven by uncontrolled government spending. This prospect of fiscal dominance is also accelerated by the historic debt-to-GDP ratio of 123% presently. This ratio is predicted to grow even more if the U.S. continues down this path of uncontrolled spending. It is worth repeating Mark Goldwine, the Senior Vice President at the Committee for a Responsible Federal Budget: we can't grow our debt faster than our economy forever. Essentially, for the past 2 years, the Federal Reserve has been slamming on the economic brakes as the U.S. federal government has been pushing on the fiscal accelerator. As the U.S. Central Bank begins to lift its foot off the brakes of the American economy by cutting interest rates on the demand side of inflation, the fiscally driven supply side of inflation is ready to peel out of the parking lot with greater speed. The end result being a weaker and inflated dollar and a dramatic surge in the gold price, as seen during the volatile period of the 1970s that witnessed violent waves of inflation, each wave larger and more intense than the last. Gold acts as a hedge against your losses in other income channels caused by the uncontrollable burden that is inflation. Gold also appreciates in price the longer you hold it. The reported measurements of inflation are one thing. The average lived experience by the regular everyday American is another. Please kindly leave a comment on your personal experience with the cost of living and its effects on your day-to-day behaviors. Gold is reclaiming its traditional role as a form of money. The constant erosion of our purchasing power through inflation, coupled with the ever-growing national debt that will eventually expand the money supply, it is no wonder why Eastern as well as Western central banks are returning to gold. We live in an era where real yield on paper currencies is failing, so it is now time to recall what was obvious a century ago. In 1912, John Pierpont Morgan said before Congress that money is gold and nothing else. When you decide to gear up for investing for retirement, you can't overlook this undeniable value that gold has demonstrated throughout history. This precious metal has served as a form of money for over 5,000 years, outlasting countless currencies and financial crises. It's not just about the glittering appeal. Gold's value is deeply rooted in its historical significance and enduring resilience. As you navigate the world of investing, it's crucial to understand that gold is steadily reclaiming its traditional role as a form of currency, but more importantly, money. This unprecedented move is primarily driven by the prolonged experiment of non-convertible paper currencies, which have historically lasted an average lifespan of 20 to 40 years. The US dollar experiment has exceeded this, being 50 years old but now showing signs of faltering. Gold's resurgence as a means of settling trade is not surprising. For over 5,000 years, money was made of gold and silver, and it's only since 1971, with the end of the gold standard, that we have deviated from this historic norm. By ending what was established in the 1944 Bretton Woods Agreement, which required a foreign country's currency to be pegged to the dollar, which by extension was pegged to gold, U.S. President Nixon ended a sound money standard of stability and created a pure fiat money standard of faith and instability. This deviation has now proven to be a failed experiment, with rampant inflation, unsteady interest rates, and economic instability being the common symptoms. Government's inability to balance budgets, coupled with fluctuating interest rates, will need to correct down eventually. These elements may lead to hyperinflation, which devalues the currency and erodes the purchasing power of your savings. Gold, on the other hand, is immune to these issues. It's a tangible asset that doesn't go bankrupt or default on promises. Central banks, aware of the dollar's diminishing purchasing power, are buying gold to protect against losses. This surge in demand, combined with limited supply, ensures gold's value and price increases in the future. The emerging BRICS nations that are now collectively beginning to outpace the Western G7 nations as a percentage of world GDP are now trading within their own currencies, bypassing the US dollar and using gold as a means of settlement. Therefore, from a long-term investment standpoint, it's wise to consider gold not only as a safeguard for your wealth, but also as a viable currency alternative. If the smart money are seeing the value of gold and accumulating it in mass amounts, it only makes sense that the average investor prepare as well. Owning physical gold and precious metals requires responsible sourcing of grades, purity, condition, best prices, and most of all, security and storage. Gold IRAs are a tax-deferred means of owning physical gold and ensuring that all these investment principles are met. We have reviewed and vetted the best gold IRA companies that meet all these requirements. See the links in the video description to access the free gold investment guides from these companies. In the next video, we will discuss one of the core reasons to own gold and why it will not go to zero as many assets have. Be sure to like and subscribe so you don't miss it. If you have $100K of retirement savings to protect and want to take advantage of the best volume prices, see the link in the video description to sign up for the free Gold and Silver Web Conference hosted by Augusta Precious Metals. Thank you for watching.